Assalamu alaikum warahmatullah. Friends, this is the last chapter in our accounting syllabus, part of this first accounting course. And the title of the chapter is Financial Analysis. So, although this is not the right term, the right label should be Financial Statements Analysis. So, now we shall see that we have prepared the financial statements and we have gone through the some of the issues in the valuation and recognition and disclosures of assets and liabilities and revenues and expenses. So, how do we read the financial statements? I mean, there are two companies, assets of one company are more than assets of another company. So, can we say the company with higher value of assets is a better company? Or a company with a higher income is better off than the company who is at a lower income in the same year? So for this, sometimes the absolute amounts do not make much sense. So we need to perform certain other workings, certain other calculations, which are actually covered in this chapter. So let's move on. We shall discuss the horizontal analysis and the vertical analysis in this chapter, number one. So these are the two terms which accounting professionals use for a particular type of calculations and analysis on the financial statements. And the third ratio is the ratio analysis. So this is usually known as the comparison analysis, horizontal analysis, whereas a vertical analysis is by itself composition sort of analysis, and this is the ratio analysis as is actually the third tool which is available to us. So let's do one by one. So horizontal analysis is basically the comparative analysis. So every item reported in our financial statements is significant. So not only horizontal analysis, we can say every analysis is a comparative analysis, because um, we need to compare one company with another company. We need to compare one income with another income, maybe 1 year of a company with another year of a company, or vice versa. So these are the characteristics of the ratios that we are going to perform. So liquidity, profitability, and solvency, these are the three lenses from which we actually measure the health of the company, that whether the company is liquid or not. It means that whether the company is able to pay off its liabilities, its expenses as and when they become due. So its focus is on cash, whether the company is cash rich company in terms of that sufficient amount of cash it holds in order to pay off its liabilities and expenses. The other lens is the profitability lens, which we know that profit doesn't mean necessarily cash. It can be a non-cash profit as well, accrued profit. So from this lens, we see whether the company is generating profits or not, right? And finally, there is a solvency lens in which we see that whether the company is sustainable or not, is long term stable or not. I mean, it's a position in terms of the balance of the loans, liabilities, and the equity. That is the right hand side of the basic account equation. Whether it's a balanced right hand side or not, right? So these are the three comparisons. Comparisons can be intra-company comparison. That is a comparison of one company data with the comparison of the same company data sometime earlier. We can compare uh, data of one company with that of an industry average. And of course, we can have intercompany comparison. And the tools are horizontal analysis, vertical analysis, and ratio analysis as we discussed. So let me come on to the mode which I can actually use for. Okay, so let's take this pointer. So horizontal analysis is actually the trend analysis, the time series analysis, right? And the purpose is to determine the increase or decrease that has taken place. So we compare the current year with any previous year. Most likely we compare it with the last immediately preceding year, right? And we see what is the how much, what items are increased, what items are decreased in income statement, in statement of financial position, in retained earnings. So every financial statements we can compute the delta, the difference of the last year items and this year items, and we can then compute the index of the delta, that is the percentage increase or decrease, right? So keeping last year as a base year, or whatever other year we are taking as a base year, and actually comparing the current year performance from that base year, and thereby actually working out the index number sort of things. So here is an example, right? For example, this is the asset side of a statement of financial position. So intangible assets 2019 were 17,500, 2020 are 15,000. So there is an increase, right? So how much increase? So increase is 2,500, right? So sorry, there is a decrease 2019 to 2020. There is a decrease of 2,500. So this decrease is how much of this base year, right? So the previous year is the base year. So this 2,500 divided by 7,500 would probably give us this percentage, right? Similarly, for the plant asset, you see here is an increase. So this increase divided by this base give us this percentage, right? 75,000 divided by 945,000 actually give us this percentage. So this actually says that our total assets have overall increased by 15%, such that our intangible assets have decreased by 14%, plant assets have increased by 26%, and current assets have increased by 7.9%. So although the total assets have increased by 15%, but it's not that every asset is increased by 15%. So the composition of the asset is actually changed. So this is the horizontal analysis of the equity items, right? So we can see that both share capital and retained earnings have increased. And this is the liability side. So the current non-current liabilities have decreased, but other liabilities have increased, and so the total liabilities have increased. And this is the total liabilities and owner's equity is also increased by 15%. So this is performed for 1 year. So this can be performed for more than 1 year. And also sometimes the practice is that we do not perform the delta percentages and delta amounts. Rather, we write here that this is for 2020 and this is for 2019. So for 2019, everything is 100%, right? Because this is the base. Whereas for 2020, we see how much of this is of that 100%. So for example, if we do this way, this will be 100% and this will be 102% because there is 2% increase, right? This is 100% and this will be 138.6%. So we also produce this type of index numbers in this horizontal analysis sometimes. And sometimes we produce the differentials, right? So anyway, the meaning is same, but these are two different ways of presenting. So here is the meaning they illustrate. For the income statement, again, same thing can be done for the income statement as well. So sales have increased by 12%, you can see, but sales returns allowances have been increased by another 20%. So the net sales have increased by 14%, right? So keep in mind, we cannot just club these two percentages and make this percentage because the percentages are based on amounts which are different. So this way we can see there is for the net income there is a 26.5% increase compared to the previous year, right? So this is the retained earnings statement, horizontal analysis on the retained earnings item, again in the differentials method. And finally, if we perform horizontal analysis for 6 years, then there are two ways to perform horizontal analysis. One is that we take 1 year as a fixed base year. So for example, the first year of the 6 years, we take the base year 100, we take it that it's 100 and compute the differences of every other year with respect to that fixed year, right? The other way is what is called as chain indices, right? Chain index numbers. So that's for every year we take the previous year as the base year. So for example, for 2017-18 comparison, 17 is 100, so 18 is whatever plus and minus of that 100. Between 2018 and 19, 18 is 100, right? So you divide the differences with the base values of 18. So this is known as the chain indices. So both of methods are actually produced depending on what is the requirement of the analysis. So here is the solution of the do it part one. In the next video, we shall see the vertical analysis.